Hello, let us look at the statement of changes in equity. And this statement shows how a company's equity changes over a period of time. Okay, for instance, if we are looking for the period ended 31st December 2025, we want to understand the changes that have been happening during that period on equity. How has equity been changing during the period? Okay, recall the components of equity where we have capital contributions, retained earnings, and withdrawals. Basically, it depends with the structure of the business. If it is a company, for instance, dividends, for withdrawals we have dividends. If it is sole proprietorship, we have drawings. Okay, we have shareholders equity for capital contributions as well, owners equity if it is a sole proprietorship, okay, and partner contribution if it is a partnership arrangement. Okay, so refer to a previous video where I have done a detailed understanding of equity, so that to better understand the components that make up equity, so then you will be able to identify them when preparing the statement of changes in equity. And this is the basic structure of the statement of changes in equity. You are expected to include the name, then include the name of that statement. Remember, these set of financial statements has other statements, so specify the statement that you are preparing, and also indicate the period that we are looking at. Remember, here we are looking at the changes during the period, so we expect that you indicate for the period that we are reviewing. Okay, unlike the statement of the financial statement, financial position, basically the balance sheet, you recall we were looking at the balances as at a certain point in time. Okay, but here we are looking at the changes during the period. Okay, and with that, you're going to notice you're going to have different components in this statement of changes in equity, depending on the operations of that business and what they are doing, how they have structured their equity as well. Okay, so here you will find, for this example, we have share capital, we'll have retained earnings. Always you'll find retained earnings in most cases, and sometimes you'll find reserves, you will find share premium. Okay, so it depends with the scenario of the business and how they have structured the equity. And also you will find reserves, so if a company has reserves, also there is that. There is also, you can find revaluation reserves. Okay, so these things all depend on the operations of that business. Okay, so the first thing is to indicate the balances as at January 2025. In this case, it is the balances at the beginning of the period. Okay, the balances at the beginning of the period. You can see we are preparing the statement for the period ended 31st December 2025. So the beginning of our period is basically 1st of January 2025. And we have been given the TB, we have been given the balance, the trial balance as at 31st December 2012. And we have also been told the share capital balance brought forward from the previous period is 300,000. So basically that is our balance as at the beginning of the period, which is 300,000. Okay, then when we look at the trial balance again, we have retained earnings balance brought forward with an amount of 122,000. So we include that as 122,000, and this will give us a total of 422,000. Okay, recall this information. Mostly also you will find it in the statement of financial position, that is the balance sheet. Recall the balance sheet usually has assets, liabilities, and equity. Okay, so our focus today is on equity, where you'll find the balance for the share capital, the retained earnings, or any other component that business has under its equity. Because remember that now we are looking at the balances as at the beginning of the period, so we will be looking at the balance sheet for the previous period. And also note that when you're preparing the financial statements of a company as per IAS 1 and also IFRS 18, you need to include comparative information. So you need to include the numbers of the prior period. So you will always have, if this period is 2020-25, if this period is 2025, you're going to have here the numbers for period 2024. Okay, so you will be able to pick the balances of these at the end of the closing balances of the previous period from the financial statements of the previous period. Okay, so you can be given the numbers of the previous period, and or you can just be given the information to just look at the opening balance of your current period. Okay, so for the profit for the year, we prepared the statement of profit or loss for this. Remember, in our previous period, we prepared the statement of profit or loss, and we found the profit for the year is 24,000. Okay, always note that the profit for the year, it increases the retained earnings. Okay, it increases the retained earnings. So here we're going to have a total of 24,000. Okay, also when we look at our TB, you are going to see we have dividends account with a balance of 30,000. Okay, so this means that during the year the company looked at their performance and they decided to pay that they can pay dividends of amount 30,000 to their shareholders. Okay, so this you need to indicate, and it will always reduce the retained earnings. Remember, it is a cash flow outwards the shareholders. Okay, so it is a payment out to the shareholders of that company. Okay, so we have less 30,000. Okay, less 30,000. Here, our share capital, when you look at our trial balance, again, you can see we had a share capital account of 300,000 balances at 31st December 2025. These basically indicate that there wasn't any change in the share capital during the period. Okay, so the balance as at 31st December 2025 is going to be 300,000, and the retained earnings is going to be 116,000, and here we will have 416,000. Okay, so this is an example for our case scenario. If we had reserves, we could have another column for reserves and indicating the specific reserves for that business. If we had, let's say, for example, shares issued during the period, we could have another row for shares issued, and also we could have another row of shares repurchased if we had such a scenario. And also another thing to note is when we have other comprehensive income. Remember, this statement of profit or loss, it's usually statement of profit or loss and other comprehensive income. If we had other comprehensive income in our case scenario, then also that one we indicate it on a separate line. So we could be having another separate row for other comprehensive income. Okay, because other comprehensive income is going to reduce, it is not going to reduce it's not going to be added to the retained earnings. I'm sorry, it is going to be all under the specific reserve that this other comprehensive income is coming from. Okay, so it is not to be included together, the profit for the year and other comprehensive income together. No, these are going to be represented separately. Okay, so we are going to look at more examples. We see given different scenarios, and also for when we are dealing with sole proprietorship, because this is for a company structure, sole proprietorship and also partnership, and also when we have different when a company is dealing with different operations, dealing with reserves, re-evaluations. Okay, we are going to have more examples of that to see how we create this statement of changes in equity. But this is the basic structure: the balances, and then the components, you include them in the columns, and then what are causing the changes, you add them in the rows, and then you will have the balances at the beginning, and then you will have the balances at the end. Okay, and that's basically the format for the statement of changes in equity.